Good weekend, all. Ira Epstein with your weekend edition of your financial market wrap-up. And this wrap-up is for Friday, and we're at the 17th of May, 2024. Well, another day up in everything but the NASDAQ. You can see most of the markets did get their gains. And you know what this has been about? A broadening of the rally. There's no question about that. You can see that it isn't the Mag 7, so to speak, if there's such a thing anymore. But that's not what the rally's been about. It's just a broadening of it. That gives it more strength overall and more durability, supposedly, on the way down, because it's not concentrated. So that's important. Excuse me. I alerted you yesterday that it looks to me like you're going to get a rally off of the 100, 200-day moving average of closes in the WTI and the Brent. You did, and I said you're probably going to get a bounce in a number of the other markets, being gasoline, distillates, and the like, and you're getting that. You're even up sharp today in that gas. So nothing's being left behind. Bonds and notes, will yields climb? You're back over 443, right in that area in the 10-year note at this point in time. Grains are always crazy on a Friday in the summertime as the planting is going on, as there's too much rain, as you get a winter wheat harvest. There's just an awful lot going on, and this is very typical. So it's hit and run time in those markets. The bigger question is what's going on in currencies, because the question there is, has the dollar peaked, or is this just a pullback? Another set of markets that exploded today to the upside, 17 cents higher in the copper market, $31 higher in the gold. And I want to remind you, my special report is on the website under the area research, and you'll see it right through here. All you do is go to iraepstein.com, click on research. The report is there. It goes off the board. In other words, it'll come off our website very early next week. It could be Monday. So be aware, take advantage of it. Our reports are meant for now. They're not history lessons. But in this one, I do cover the seasonal charts, the price counts, and there's some whopping numbers. If I told you some of the numbers that gold can go to, you'd fall back on your chair. I then cover for you the weekly charts, the daily charts, and I do it both in the futures and GLD. So giving you a whole array of things to do there. So just take advantage by going to iraepstein.com. All right, let's take a look and see what we have on the S&P. The old high close, and this is a monthly chart of closes. The old one had been 5308.5. We're over it right now, but we're only halfway through the month, right? When you take a look at the weekly chart on a weekly basis, that was also the high weekly close, and we're through that on a weekly basis. That can't be taken away. On a Friday, you ended up there, so next week we have a new week. This is a new all-time high. So now what do the traders that were looking for 5,200 by year end do? Many of them are sitting tight. They're saying, yeah, you can go up more now, but you'll be back down there. Others are raising and say you might go to 5,400 right now. I've heard, Rick Reeder from BlackRock yesterday said from these levels, another 10 to 15% is possible. He didn't say it has to happen, but it's very possible. Well, that would carry this market close to the 6,000 level. So things you got to think about. When we look at the chart action, we had a correction on a weekly basis that lasted better than a month and a half. And now the market has come alive and the market has moved back up. The pattern on the chart, because of that correction, is not one where you have an easy play. You have instead a higher high, lower low scenario. But the whole thing only carried into the 18-week moving average of closes. And as you know, I call that the line in the sand. Markets and moving averages often like to go to a center line. And from that center line, they figure out what to do. I like the 18 number. Some traders like a 20, some a 21. I used to buy a service that would try to pick the right one for any one of the futures markets. I found it worthless. It gave me no edge at all. Does it have to be that exact? I don't think so. So I think that you just see that if you're over that number, you have upside bias, under it, bearish bias. The first challenge of it often doesn't set a trend. That's your retracement, and you're trying to figure out what you're going to do from there. When we look at where the market's been to, it could go to the upper Bollinger Band. The market often gets up to it and then backs away a little bit. It's been the nature of this type of market with this. And momentum is overbought. Overbought is not something a lot of traders will deploy new money in. Traders like when it's embedded or as it's coming up here. But once you're into the overbought area, you could go either way, and deploying in that will keep some money sidelined, new money that might come into the market. When we come at the Dow, this is an area where you're going to have resistance, in my opinion. And I know you'll say, we can pop right through that. You can. I'm the first to tell you can. But 95% of the time, you're going to stay within the bands. You came out of it here, you came out of it here, you came out of it here. That happens. Different markets work different ways. The thinner the market, remember this, the thinner, the lighter volume trade, the lighter open interest, easier it is to move the market out of here vertically up or down. The bigger the market, the harder it is to do because you have so many more players with so many techniques, with so many ideas in the market. So you can move a hog market one way, a copper another. Try to move a bond market that way or a note market. You can get it done. It's rare because it's so big in the amount of trade that it has. When we come to the NASDAQ, back up to the upper band. Again, a resistance zone. Resistance doesn't mean I'm bearish. Resistance means I think pros are taking money off the table at those numbers if they were long. In the Russell, you might get up there, so I'd be watching that very carefully too. When we look at the 5-year note, the pattern changed. Now, you have an outside week up. If this week's low, which was 108.15 and the 5-year is taken out, that could be a sign that this is nothing more than it was a rally in a market that's got bearish biases. It's under the 18-week average, and it might want to resume and get back to that lower band. Same thing in the 10-year note. So you keep your eye on what they're doing. The markets are correcting, present tense, an oversold condition, but both are under their 18-week average of closes, which keeps the bias down in them. In the dollar index, you've pulled back to the 18-week average. We've seen this story before. In fact, you had a big rally here. You fell all the way down, then went up for new highs on the move. Now you're coming back down. The question is, if foreign banks begin to cut interest rates, are their currencies going to rally or break on that news if the U.S. stays higher for longer? That's the battleground. And I know you're going to tell me, Ira, the Fed swap rates are showing September's back in play. I don't deny it, but it goes in and out of play every 30 days. September's a long way off. We are in the month of May, agreed. You got June, July, and August data to finish up with, and we got to finish up May. We don't know what this is going to end up showing yet. In the eurocurrency, the argument already is breaking out with European Central Bank members that they're in line for a June cut. Now they're arguing we shouldn't do one in July. We shouldn't do one in August. Folks, they'll take it one at a time if they're going to go ahead with the June cut. Got to get through this data. Miss Lagarde watches data. The data comes in a surprise in the second part of the month. As much as all these people are saying, oh, it's a guarantee, it's not a guarantee. Make the data weak, it's a guarantee from the looks of what we're hearing. Trend up at this point off the idea of a rate cut. Interesting, isn't it? So are they saying it's going to spur on the economy and that's why it's going up? In the Canadian dollar, everything against dollar getting a bit of a bump. You can see higher lows, higher highs, but staying under the 18-week average. So the bias is still down in the market. In the Japanese yen, trend down, bias down, but I would not, if I were you, press beyond this lower Bollinger Band. Remember what I told you when we got this rally, and I said it to you here. The traders will not accept that. They'll push the market, and they did. Seen this over and over. The bank has to now get on board and do something to keep these people at bay. Not talk. Do a real whatever that thing is. In Bitcoin, I was surprised it wasn't actually stronger than it was. It finished the week up 10%, which is phenomenal. But gold's at highs that it hasn't seen. Silver's in a runaway, and copper didn't really do that. Okay, you have the no trend market. You got a higher high, lower low, but you've kept the bias up since October. That's still very impressive. On the daily charts, if you'll recall, I was saying I think 63,000 would be the support. It's turned out to be in that area. In the Brent, well, when we look at the area chart of closing price difference between Brent and WTI, it continues to narrow in. It's at 392. That difference was up at 5 a while back. When we look at these markets on a weekly basis, do you see a trend in that? Because I don't. I don't see anything. I see a market that tried to stay under the 18-week average, and it's challenging that. It has resistance between 84.37 to 85.99, let's call it, but I'm not seeing a trend in the market. When we look at WTI, it could get more interesting here. You did have an outside week to the upside. Now, the battleground will be the same as in the Brent. It's going to be the 100-week average to the red, which is the green, to the red, which is the 18-week. Momentum down. It's just an ugly chart. Not really a lot going on. In gasoline, remember what I have been saying on the weekly charts. Probably due for some short covering, and you've had it. You're up 3%. Now you're into the resistance area. If it can clear this, well, then you can say, now we're starting to get where the market's understanding the kickoff of the season, beginning Memorial Day and carrying you well into July, is underway. And driving is going to take off. So people will look at that. You'll hear the different stories and so on. Take advantage of my gold report because this market has come alive. And right now that report looks pretty much on the money. We will see just how it plays out. Go to IraEpstein.com. Remember that, IraEpstein.com. When you get there, just go to the word research and you will see it's labeled for you. I'm Ira. You have a great weekend. I'll catch up with everybody Monday morning. You can watch the other videos as they pop up here for you over the weekend. Take care.